Hey guys, what's going on? It's your big dreamer and doer, G Dinero, coming to you today to break down the trade. This time it's Invest Answer's latest synthetic long with the third leg of the stool covered call. This time it's a DFDV January 16, 2026, 2520 custom synthetic long with the third leg of the stool being the July 18, 2025 DFDV $35 call option. Now remember, none of this is tax, financial, legal, investment advice. It's your buddy G Dinero helping you increase your financial literacy to help put you and your family on that path to financial freedom. And if all of this sounds like gibberish to you, don't worry. I'm going to break it down exactly what he did and why he did it today. So this is the initial post from Invest Answers. He initiated a small position in DFDV, which is a company aiming to emulate MicroStrategy with Solana. Basically, it's a Solana treasury company, much the same way that MicroStrategy is a Bitcoin treasury company. And again, he says, while their success is uncertain, the recent $5 billion equity line to acquire more Solana caught his attention. The NAV premium is higher than he liked to see it, but it's more reasonable than MetaPlanet's, and it now offers options. So it was finally his time to jump in. And he also believes that Solana will run later this summer per the ETF, right? He thinks that the ETF is going to be approved, and when it is, it'll cause Solana to start running. So the fundamentals are better than ever. It'll make DFDV go through the roof. 52-week high is already $54, and he's been waiting patiently for this. And if it goes below $20 a share, he'll double down, or he'll triple down on it, his usual method. So this is what the charts look like at the time. DeFi Development Corp was holding about 621,313 Solana at the time, valued at over $98 million. Couple that with $2 million in cash, and you've got a $100 million company basically at that point. And the NAV premium, though, was, where did it go? I saw it on there. Oh, right over there. Yeah, the NAV premium is like 267%. So it was really high at the time based on what the market cap was. The market cap of the company is $368 million, but the value of the Solana and the cash at the time was about $100 million. So 3.5x roughly what they were holding on to. The chart on the bottom right-hand side shows that it had pulled back. There's the high all the way up to $54. It had pulled back to about $14 a share, it looks like, on June 6th. And then today spiked up, or over the last couple days, spiked up to $28 and pulled back to $24. So that's when he took entry into this position. What was the initial trade? Again, he sold the January 16, 2026 DFDV $25 put for $13 a share, collecting $1,300 up front. He needed $2,500 to collateralize the put. This is due to assignment risk. What that means is he could potentially be put or assigned the shares at any time between now and January 16, 2026 for $25 a share, right? It's typically going to happen when it's below $25 a share, not when it's above that. Nobody's going to sell their shares for less than what they're worth out on the open market. But in order to take this trade, he had to have that collateral or that margin securing the put. Basically, that's what it's called, is securing or collateralizing the put. Invest Answers bought so he sold the put and he bought the January 16, 2026 DFDV $20 call for $11. That means he spent $1,100. So he collected $13 a share or $1,300. He spent $11 a share or $1,100, resulting in a net credit of $2 a share or $200. He got paid $200 to take this trade. That means his break even on it, or cost basis, however you want to look at it, is $23 by January 16, 2026. As long as it, meaning DFDV shares, are above $23 by January 16, 2026, this is a profitable trade and he made money. Now, after doing that, literally within 90 minutes, and there was a big spike on the IADSS Confluence model, and it said to sell. So Invest Answers checked the options and the options prices, and they were juicy. The price was around $30. So that price is not the price of the options, it's the price of the underlying shares. The underlying shares went from around $24, $25 a share, shot up to $30 a share, causing the options market to spike. And so InvestAnswer sold the July 18, 2025 $35 call option against his initial position for $5, just like he did with CEP a few days ago. This is what the chart looked like at the time. You can see that massive spike up from around 9 a.m. Eastern Standard Time to around to around 11:30 a.m. Eastern Standard Time. That chart is in Pacific Time. And you see that it was around $29.20 when that sell flag actually fired. So this is what that follow-up trade looked like. InvestAnswer sold the July 18, 2025 DFDV $35 call option for $5. He collected $500 per contract. It was sold against his synthetic long that he put on earlier in the morning, which netted him $2 a share or a $200 credit. So now he's being paid a total of $2 a share plus the $5 a share from the most recent call option that he sold against the position, equals $7 a share or $700. He's being paid $700 to be in this trade right now, lowering the break even from $23 down to $18. That's his new cost basis on this trade. So what are the potential results of this trade? Well, let's go ahead and dig into that. If he gets called out of his position in July, right? Let's say he did nothing and DFDV goes ballistic, and on July 18th, it closed the expiration date of the short call. Let's say DFDV is at $40 a share or back up to $50 a share, okay? What happens? Well, the puts that he sold initially would still be in play. Those are in play all the way out to January 16, 2026. That means that $2,500 of collateral still needs to be there to secure the puts, okay? That's an important part of it. The synthetic long that he initially put on, half of it is still alive at that point. The other half, the calls, remember, he bought the $20 call options initially and sold a $35 call option against them. 35 minus 20 is $15 a share, or $1,500 is what those calls are worth. His calls would get called away from him and $1,500 would show up in his account. Add that to the $7 a share worth of credit that he's already in, $7 a share plus this new $15 a share, and that equals $22 a share, or $2,200 of pure profit, right? Pure return. Because remember, it didn't cost him anything to put the trade on in the first place. He got paid to put the initial trade on. So far, he hasn't had to spend any money. He's just gotten paid, got paid, and got paid. If he were to buy these call options back on a mean reversion, so let's say it doesn't go to $40 or $50 a share, but DFDV by July 18 is still sitting around $20 or $25, but he's nervous that it might go above that, well, then he could buy it back. And let's say he bought it back for $1 a share. The same thing that he sold initially for $5 a share, he buys back for $1 a share. So he gives back $1 of the $5 that he initially collected, or 100 of the $500 that he initially collected. And his synthetic long would now be uncovered, which means he'd be at an unlimited profit. It also means that since he had originally collected $2 to put the trade on, another $5 for the covered call, $7, if he gave back $1 of it, he'd be sitting at a $600 credit in this particular example. Now, let's say it goes to poop, right? Everything expires worthless. DFDV tanks. Well, he'd be assigned those shares at $25 a share. Let's say it drops to $10 a share. He'd get assigned those shares at $25 a share, or he'd have to come up with $2,500 for every 100 shares that he would need to purchase. But remember, he had already collected $700 at that point, and everything else expired worthless. So his true cost would be $1,800, $2,500 minus the $700 worth of net credits that he had collected at that point. If you'd like to see more content like this, make sure you like this video. Comment below. What did you learn? What do you like best? What would you like to see more of? Make sure you're subscribed to the channel. If you are, that means you'll see more of my content but also more content like mine. If this is the type of thing you want to learn, that's how you're going to see more content on it. If instead you want to accelerate your learning, go ahead and book a course with me. Book my TradingView and Technical Analysis course where I teach you how to read the charts like a pro. You'll literally know how to track your current assets that you're in and even be able to predict with certain amounts of, with a great amount of certainty where they're heading in the future by learning technical analysis inside and out. Now, if all of this sounded like gibberish, all this option talk sounded like gibberish, you're going to want to book my Understanding Options course where I teach you from soup to nuts how to trade options like a pro. Within 60 days, you'll understand what this stuff is all about and how to make money using options. And if nothing else, book an individual appointment with me at gdinerocoaching.com. Guys, I'm G Dinero. I'm here to help you increase your financial literacy to help put you and your family on that path to financial freedom. Thanks for tuning in today, and we'll see you next time.